Okay, good morning, everybody. It's now 10 o'clock. I have to talk through the microphone. I would prefer not to. However, we are also simultaneously doing this as a webcast, so we want to make sure that all the people that are out there can hear us also. So good morning, and I want to thank all of you that are here today for the annual shareholder meeting of the Lightwave Logic company. And I want to welcome the people that are on the webcast also. So thanks very much. I'm Tom Zellabor. I'm the CEO. I used to be. I'm the chairman of the board of the company, and I've been involved with Lightwave Logic since 2008. So I've seen all the transitions that have gone on, and I think we have some great information to get out to all of you today. I do want to take the time to introduce some people. Our board of directors is here. We have Dr. Joe Miller, Dr. Fred Leonberger. We have Ron Bookie, Siraj Noor Alamati, our COO and financial officer and president, and every other title we can give him, Jim Marcelli, and our CEO is Dr. Michael Lebby. So thanks to all our board. We had a great meeting yesterday. We always do a board meeting in conjunction with this event, so I want to make sure that everybody knows that that's part of this process too. Also with us is Oksana Holubowski. Oksana is with our auditing firm of Morrison, Cogan, LLP. Most of you have seen her here every year. She will have an opportunity to make a statement if she wants to, but I don't know if you do you, Oksana? Okay. Today's meeting, as you know, is always, it's in two phases. The first phase is always a formal one. I'll be reading directly from a script. Jim and I will do the ham and egg routine up here, going through that, because that's what we have to do in order to address all the issues that are going to be voted on. So that will happen, and then after we go through that, then we will have a company presentation like we've done in the past, and that will be with Michael Lebby. So with that, I'm going to go ahead and kick off the formal portion of the meeting. Jim Marcelli, our corporate secretary, will be recording the minutes of this meeting. David Siddle, the duly appointed representative from Broadridge Financial Solutions, has been appointed to serve as the inspector of election for the annual meeting. Mr. Siddle, will you please stand? And he's in the back there. Mr. Siddle has signed the oath of office, which has been filed with for the minutes of the meeting. For the formal portion of the meeting, I will now call on our corporate secretary, Jim Marcelli, to establish that we have met the necessary corporate requirements for this meeting.
We have proof that the notice of this meeting has been duly given, and the notice of the annual meeting of shareholders. Proxy statement and proxy was mailed on or about April 19, 2019, to all shareholders of record at the close of business on April 5, 2019. The affidavit, together with copies of the notice, proxy statement, and proxy, will be filed with the minutes of the meeting. As of April 5, 2019, the record date for the meeting, there were 81,726,880 shares outstanding. We have 51,853,675 shares present by person or proxy at this meeting, which is over the 33 1/3% of the outstanding shares that constitutes a quorum permitting the transactions of business. Each share entitles the holder to vote on each matter that may become before the meeting. A list of registered shareholders entitled to vote is available for examination by the shareholders.
Thanks, Jim. Since a quorum is present, I will now call the meeting to order. The meeting will proceed as provided by the agenda, which you can find in your seats. The items for today are to elect 3 directors to the board of directors to serve until the 2022 annual meeting of shareholders or until their successors have been duly elected or appointed and qualified. To approve an amendment to increase the number of shares of common stock available for issuance under the company's 2016 Equity Incentive Plan from 3 million shares to 8 million shares. And finally, to ratify the appointment of Morrison Cogan, LLP, to serve as the company's independent registered public accounting firm for the fiscal year ending December 31st, 2019. And also we could consider and take action upon any other business as may be properly come before the annual meeting or any adjournments thereof. Jim, would you please describe the voting procedures?
We will be voting by proxy ballot on the agenda items described in the proxy statement previously sent to you. If you have already turned in a proxy card and you do not intend to change your vote, it's not necessary for you to vote again. However, for those of you who did not turn in a proxy card, or if you wish to change your vote, please get a blank ballot card from Mr. Siddle, our Inspector of Elections, for use for voting today. If you take a ballot, please be sure to print your name and the number of shares you are voting on the ballot. If you have previously sent in a proxy card and you are changing your vote, please note this on your ballot. The ballot must be signed by the shareholder. After completion of the ballot card, please give them Mr. Siddle as soon as possible, and the results of the voting will be announced at the end of the formal portion of the meeting.
Does anybody need anything from Mr. Siddle? The first item of business is the election of 3 Class II directors to the Board of Directors to serve until the 2022 annual meeting of shareholders or until their successors have been duly elected or appointed and qualified. The Board of Directors is comprised of 7 directors and is divided into 3 classes, currently comprised of 2 Class I directors whose terms expire at the 2021 annual meeting, 3 Class II directors whose terms expire at the 2019 annual meeting, 2 Class III directors whose terms expire at the 2020 annual meeting. The Board of Directors has nominated 3 Class II incumbent directors for re-election and recommends a vote for the election of the Class II incumbent directors. Our Corporate Secretary will now place the names of the nominees in nomination.
The Board of Directors has nominated the following Class II directors to serve a term of 3 years or until successors are elected and qualified: Michael S. Lebby, Joseph A. Miller, Ronald A. Bookey. Applicable federal security laws require that advance notice be given to the Secretary of Shareholders' intent to nominate other persons as directors of the company. No such notice has been received. Accordingly, the nominations for directors are now closed. The 3 nominees for the directors receiving the highest number of votes will be elected to the Board of Directors. The proxy solicited by management will be voted in favor of the director nominees. I hereby move that Michael S. Lebby, Joseph A. Miller, and Ronald A. Bookey be elected as Class III directors to serve a term of 3 years or until successors are elected and qualified.
Do I have a second? All right, there we go. The next item of business is the approval of an amendment to increase the number of shares of common stock available for issuance under the company's 2000 Equity Incentive Plan from 3 million to 8 million shares. The vote required to approve the amendment to the 2016 Equity Incentive Plan is the affirmative vote of the holders of the majority of votes cast at the annual meeting entitled to vote on the matter. The Board of Directors recommends a vote for approval of this matter.
I hereby move that the amendment to the 2016 Equity Incentive Plan be approved.
The next item of business is the ratification of the appointment of Morrison Cogan, LLP as the company's independent registered public accounting firm for 2019. The vote required to ratify the appointment of Morrison, Cogan, LLP to serve as our independent registered public accounting firm for fiscal year 2019 is the affirmative vote of the holders of the majority of the votes cast at the annual meeting entitled to vote on this matter. The Board of Directors recommends a vote of approval for this matter.
I hereby move that the appointment of Morrison, Cogan, LLP as the company's independent registered public accounting firm for the year ending 2019 be ratified.
There being no other items to be brought before our shareholders for a vote at this meeting, voting is now complete. All ballots must be turned in to Mr. Siddle at this time. The Inspector of Election has tabulated the votes, and Mr. Siddle will now give us the report of the Inspector of Election.
The votes have all now been counted, and based upon the preliminary results, the 3 director nominees have been elected as Class II directors to serve for a term of 3 years or until their successors are elected and qualified. The amendment to the Lightwave Logic, Inc. 2016 Equity Incentive Plan is approved, and Morrison Cogan LLP has been duly appointed as the company's independent registered public accounting firm for 2019.
Thank you, Mr. Siddle. This concludes the formal portion of the annual meeting, and the annual meeting of shareholders is now adjourned. So with that, I would like to give the microphone to Michael Lebby. He's going to go through a update on where we are with the technology and what's been going on with the company since our last meeting. And so I hope you folks enjoy the update. And I do want to acknowledge the fact that even people on the webcast can send questions. So after Michael's done, then we will kind of alternate. We'll take questions from people in the room and questions from online, and we'll just go back and forth as much as we can. So, Michael, over to you.
Thank you. If we can set this up. Good. Good morning, everybody. I woke up this morning with my voice a little croaky, so hopefully it will last while I go through the presentation here. The microphone does help. So welcome, everybody, to the meeting. I'm going to give a management review. It's the 16th of May today, so I will continue. We have the safe harbor slide. I'm not going to read all the words here, but I think most people understand what it conveys. So what does it take to enable today's data services, such as streaming video or social media, activity trackers, e-commerce, things like that, and to enable tomorrow's new products, tomorrow's data services that are more intelligent, more immediate, have richer data? Actually, things like this, and I showed a lot of this in previous presentations, and if you look onto our website, you'll see some of my presentations. And I actually do detail, these large buildings here are big data centers, these are Google data centers. And this is this figure on the right-hand side depicts what the optical network looks like. So a lot of that information has been conveyed before. But really, the thing that really needs to happen is that radical innovation. And I heard this a number of times at a number of conferences I've been to earlier this year. Radical innovation, and I've circled that, to enable tomorrow's data services, more intelligent, more immediate, more richer. And so this radical innovation, this is something that's all about Lightwave Logic. And Lightwave Logic, we got the tagline, faster by design. And what we are doing, and I only have a couple of slides here on the technology for an introduction because a lot of folks have seen this before. We're developing ultra-fast optical modulators. These are optical devices. And in fact, I've got a very simple depiction at the bottom of the slide. If this is an optical link, you have electronics on one end of the link, and you have electronics on the far end of the link. But in the middle, you have optics, which are depicted through this square pattern. The modulator is this green box. This is what Lightwave does. And so the box of the L is the laser, and on the far end, on the other side of the optical link, you've got to be able to detect the optical signals. So you have a photodetector and a transimpedance amplifier. But the green box is what we do. And what we do is ultra-fast optical modulators. And they convert the electrical data stream that comes out of the Internet electronics into optics and send it very, very quickly across the fiber optics. And to do this, we're using electro-optic polymers. We're not using semiconductor crystals. And the reason we're using electro-optic polymers is because they go faster, and we've now designed them to expend less electricity, so they're lower power. And we're addressing some very large markets. As you can see here, the next generation is forecasted to be $27 billion for transceivers and photonic integrated circuits by 2025. So these are large and growing markets, and I'll show a little bit more information on that as we progress through. But the takeaway from this slide, as you can see from the bottom green bar, is that our modulators are unique. And in fact, if you look at some of the key attributes from our ultra-fast optical modulators, they enable faster, lower power, lower cost internet, and we have faster devices. We have lower power in terms of lower voltage. We have low cost because we have very simple and standard fabrication techniques, and they are robust and stable. These are actually essential optical components. They're essential elements for the fiber communications market. So let's take a quick look at the market. This is sort of a larger version of the small picture I showed 2 slides ago. The photonics market, we can look at many different market reports. It shows that it's large and it's growing pretty quickly. As you can see here, this market data shows data out to 2025. Total photonic components, $44 billion by then. Fiber optic transceivers, $27 billion by then. That's 61% of that market. So that's really strong growth as we look out from 2019 to 2025. And that's strong for the next decade. And we've actually seen these types of graphs in many different market research companies. But in general, if we start looking at these markets and the value chain that these markets bring, remember, we're on the optical components end of the system, the path to market. And this is what it looks like if you're a modulator company and you're a component supplier. You're on the left-hand side. This is the supply chain. This is the value chain of what we look at. And you can see the next big column there is high-speed optics manufacturers. And there's some big billion-dollar numbers there, too, by some different market research organizations. And then you've got the networking equipment manufacturers. And they feed into the Internet and the cloud service providers. And as you can see, it doesn't matter who does the market research. These are large and these are growing markets. So one of the key questions that we are asked, and many investors have asked me over the last years, is how does Lightwave enter these markets? I mean, this is a pretty big value chain, and there's lots of big companies that are part of this. So what I'm going to do now is I'm going to go straight into the business strategy. I've had a lot of questions over the last year, so let's go talk about business strategy. Last year, I spent the first part of my talk giving sort of a tutorial about the fiber optics market and how everything works. But I think this year, people really want to figure out, how does Lightwave enter these markets? Well, the first thing I'm going to show is a spider chart. And I don't know if many people have seen a spider chart. They've been around for 50 years. It's what a lot of the technical community use for benchmarking technology with competitive technology. And so what I've shown here is spiders probably came from the name that it probably had 8 legs to begin with. I'm showing a chart here on the top right-hand side that has 4 legs. So it's not really a spider, but it has 4 main parts of our modulator design. As you can see, we have high speed, higher is better. And you look at the top part of that chart, 5 is the maximum. And on the right-hand side, you've got stability, electro-optic polymer stability. Higher is better there. At the bottom part of that chart, you've got lower power. So if you get a 5 out of 5, they've got very, very low power, very, very low voltage. And on the left-hand side, size. Clearly, a smaller size modulator is better than a larger one. So this is a relative comparison of key metrics and specifications. And if I plotted a little table here on the lower left-hand side, just to give an example, if you're really good at high speed and you're really good at low power, then you're 5 out of 5. If you're pretty good at small size, 4 out of 5, and you're pretty good at high stability, you're 4 out of 5. And you plot those, and you can see the orange or the gold covers most of that diamond. And so the goal here is when you compare technologies, if you can cover the complete diamond, you're doing pretty well. And so what I plotted there is like that diamond is fairly well covered. And what it actually shows is technology strengths and weaknesses. And the first thing to take away from this slide is, the polymers are attractive. And that's a nice slide on its own because it shows the polymers are doing pretty well. But we have to benchmark that with other technologies. And so what I'm showing here is as we go out into the community and we look at our technology and how that performs, what I've done here is I've compared it with classic other modulator technologies. So in the top left-hand side, you see silicon photonics. In the top middle, you see indium phosphide. And in the top right, you see lithium niobate. And you can look at how the canvas or the spider is being covered. And so let's just take silicon photonics. One of the things about silicon photonics that we know is very, very stable, very, very reliable. Silicon is a material that's been around for 50 years, and a lot of CMOS and ICs use that. And so that's well known. We know silicon isn't too low a power, and we know the size is not that small. And we also know that silicon suffers from super high speed. So the coverage of the silicon is not the same as polymer. If you look at indium phosphide, for example, we know indium phosphide is very, very stable. We also know indium phosphide is really, really small. It's being used in a lot of transceiver-type format, transceiver boxes with small format sizes. We also know the indium phosphide is not quite the fastest out there, but it's pretty good too. And the same thing when you start looking at lithium niobate. Lithium niobate is a modulator technology that's been around for 30 years. One of the things that made lithium niobate a success was the fact that it was fairly high performance. It wasn't the highest, but it was extremely stable. And we knew that from the temperature, and that's why the telecommunications industry used lithium niobate 25 years ago. But we also know lithium niobate needs tens of voltages to drive it, and it's very large. And so you can see from that purple graph there that from size and low power standpoint, it doesn't really go to the fives. It's down at a lower level. But when you start comparing that to our polymers, we cover most of those 4 points. So on a relatively benchmarking basis, you can see on the key parameters that the polymers have a really good position. And one of the other things that we've mentioned before in our history is that, because this is a ridge waveguide polymer modulator, but if we start looking at slot modulators, and we've talked about that a little bit, and that's still very much in the R&D stage, slot modulators are really tiny polymer modulators. And so you could see you could push that size from 4 to 5, so you can actually cover a little bit more for a next generation type of modulator. But the takeaway from this slide is that when you start comparing what we have in terms of our key metrics and specifications, we're actually looking pretty good. And if you take this a step further, and this slide here shows spider benchmarking charts for the EO polymer material. Remember 2-3 months ago we had a press release that indicated we had a much higher performance EO polymer material. I mean, there was a really nice work from the chemistry team. What we're showing on this graph is the PKM series. This was the EO polymer we've been using for a long time. And you can see, you can plot it in the same sort of metrics. And you can see the coverage that the PKM technology had in red. We looked at BR Photonics. Now remember last year we acquired the assets, the polymer assets of BR Photonics, and that's now Lightwave Logic technology. We also looked at that EO polymer material and we plotted that on the graph too. So you can see some slight differences. The BR Photonics was well known because they had good high stability, and they did some very nice work there. They got some nice bandwidth results, and we saw that too. But it wasn't very low power, and we realized that when we looked at the technology. We even actually benchmarked a competitor. I'm not going to name the competitor, but you can see some of the competitors' metrics are slightly different. But as you compare that to the announcement we made 2 months ago, or maybe it was 2.5 months ago, with our new PKM series, look at the performance of our new PKM series. So you can see very clearly, without going into lots of technical equations and formulas, that the new PKM series is actually performing pretty well. And since the press release, we've actually improved the performance. I actually, just for the sake of simplicity, put new PKM series with a little star. And you can see we actually improved some of the performance in terms of low power and low voltage. And so the takeaway from this slide is that, you know, the polymer performance has certainly improved over the last year. The material properties are driven by device specifications because we're designing these electro-optic polymers to go into modulated devices. And quite clearly, our polymer materials are state-of-the-art. And that is really, really exciting. That's a really nice improvement compared to where we were a year ago. And in fact, as part of the benchmarking activity is to figure out who else is doing polymers around the world. I mean, are we the only person? Well, this slide shows a bunch of other, mostly universities that have got some type of polymer program. It may be passive, it may be active with EOs. But, you know, so what are the takeaways from this slide? Well, very clearly, Lightwave Logic is leading commercially. There's a couple of entities here that are looking at trying to get pre-commercial and trying to do some level of commercial work, but outside of the fiber communications field. But in terms of direct competition, I mean, we're commercially ahead. And that means that we have to protect what we've done here in terms of improving our EO materials and our device designs through patents and IP. But the majority of this slide are all university interest. I remember a question came up last year at last year's annual shareholder meeting, and it asked me who else is working on EO polymers, and I listed 5 or 6 universities that were active in it. And we did a more sort of in-depth look this year, and we found this. This is pretty much everybody. And so when you start looking at everybody and you start looking at where we are in terms of our performance, we are ahead of the game, and we need to make sure that we protect that position. So let's look at the product development plan, because a lot of folks, a lot of investors really want to hear about where we are in terms of product development. This is a slide I used before, but I've actually updated it a little bit. We want to make polymers the key platform for the next generation optics, certainly in the fiber optics network. And where I've circled in red is where we are today. So you can see on the bottom horizontal axis, immediate, in progress, and coming. And so for us, we have to prove out and we have to show that we have polymer performance. We have to show that we have good polymer reliability. We have to show that our polymers are robust and they're stable. And once we can do that, you start looking at customer interaction, testing, and evaluation. And everybody's read the 10Qs and the Ks. And so this phase that we're in right now is setting the stage to support customer strategy. And that stage has to review a whole bunch of different things that come up, including, you know, reviewing licensing opportunities, reviewing ramping of technology, increasing your volumes, reviewing outsourcing with contract manufacturers. I mean, how do you deal with high volume ramps? Reviewing custom manufacturing facilities and services. These issues come up as you enter this phase. And so we're in the phase right now where a lot of these issues are coming up, and internally to the company we're dealing with those. And this is exciting times. I mean, this is very much a different time than we were a year ago. And in fact, what I've tried to do now, because I had a lot of questions on this type of process, where are we actually, what position, where we are in the phase. And so I put this new graph together. And this is, I've entitled this, The Route to Maturity and Volume. And what I've used is TRLs. And if you're from the defense industry, you've probably heard of the TRL. It stands for Technology Readiness Level. It's what the U.S. Defense Department uses for technology that starts in the lab with some idea and concept and progresses all the way through prototype and pilot lining and eventually to manufacturing. And in fact, since the Defense Department started using it 40 or 50 years ago, pretty much a lot of commercial industry uses it today in the U.S., and I've noticed in Europe too, they start using the TRL numbers. And so what I've done here is I tried to show very clearly where we are in the phase. Now, we're not in the idea stage, of course. And so what I've colored in orange and purple there, we're in the prototyping and piloting stage. And what does that actually mean? Well, remember, the company has a long history. We went from organic chemistry here, and we spent a lot of time really improving our EO polymers. And then we went to prototypes. And so you can see we put a modulator chip into a package, and you make one of them, and then you make more of them. And so what I've depicted here below is sort of the process you take when you work through this type of chart. So this is the route you go from idea to manufacturing. And so what I've done is like place this over our history. And we have a long history at this company. We have a lot of investors that have been here for a long time, 10 years of investments. And so we were an EO polymer materials company for the longest time. And in about 2015-ish, that sort of time frame, we started turning these polymers into modulated chips. And so the first things we did was try to see how fast they would go, what would be some of the key specifications. And we put some press releases out in the 2016-17 time frame. And as you can see, what I've overlaid on this graph is that part of the TRL route to maturity in terms of prototyping. So 2017, 2018, 2019, we've made very, very fast progress as a technology company. And this has been really, really impressive. And so we're moving and we're quickly transitioning from a materials chemistry company to an advanced polymer device platform that has chemistry. And so a lot of questions that come in from investors are, so what's happened in the last year? I mean, you're out there, you're talking at conferences, you're engaging with different folks. You know, what's the feedback? So what I've tried to do in this slide is give some sense of the feedback and still protect the innocent. And so generally, a lot of people have heard about EO polymers now. And they've also heard that they're very, very fast. So we're getting a lot of questions. So how fast can your modulators really work? And then we're getting comments like, we are very interested in polymers. I mean, we haven't heard about polymers for 20 years, but wow, this is really exciting. And so the next step, once you get through these types of questions and feedback, is we want to see a lot more data. We want to see a lot more reliability data. And so some of the quotes are, this is really exciting development. How can you prove to us that polymers are reliable and they don't degrade over time? So these are the type of responses we're seeing. We would rather pay more for performance and reliability. And so some customers have had a lot of problems with semiconductors. And they're seeing the opportunity here, wow, these polymers are fast, and they want to see the data that shows that they're reliable. We like your initial specifications, bandwidth, low voltage. It's a great start. But as you know, we like to look at lots and lots of data. So at some of these companies, there's technical people just like myself that really like to see lots and lots of technical data. And so we're getting that direct feedback. Can you show us data that the voltage level doesn't increase over time? What these things are telling us is that the type of experiments, the type of product development, analysis in terms of DOE testing we have to do internally to make sure everybody is satisfied that our polymers perform like we hope they will perform. What is your temperature stability of the polymers in your modulator? So that question comes up a few times. They also want to know if there's any operational considerations. So some folks are going, wow, yeah, this is pretty cool. How do we really implement it into our system design? And so, for example, can I use my existing bias control scheme as far as the voltage time constraints are in your modulator? So people are actually thinking about how they get implemented and what system changes need to be done. The takeaway from this slide, very simply over the last 12 months, is interest is very high. And we do need more data, and we need lots of it. And so the focus for the company going forward is we need to generate more data so we can answer these questions. And the best talks a technical person can ever give is you've got lots and lots of data. It's just the easiest way to give a talk. And so this is great. This is really, really exciting. And in fact, you know, I've just put a comment here. Initial feedback is good. We need more data. So that's the message. It's a very clear message. And then a lot of questions about the engagement design cycle for customers. A lot of investors have asked me, you know, what is this? You know, can you give us more color on this? Can you give us more details? These are the classic steps, how you engage with a customer in this market segment. Remember, this market segment is fiber optic communications, very, very high performance devices. It's complex and it's very technically challenging. And so, the customers were looking for a next generation solution. Maybe it's a line card, maybe it's a transceiver, maybe it's some server rack. They'll want to sign an NDA. They'll want to look at some initial specifications. They want to have some prototype specifications. Then there's some prototype testing by the customer. They'll be optimizing the prototype performance. Then there'll be approval of the vendor list, so that's the AVL. That means you're actually allowed to engage with that company. There'll be limited sampling. There'll be initial designing, and then there'll be product sales. It's a pretty long process you have to go through in this type of technology. What I can say, and what I'm really excited about, is that we're on the cycle, and this is, Lightwave is now part of this process for the first time, and this is really, really exciting. So no, I'm not going to detail exactly where we are, but we're in this process, and this is an exciting part for the company, and the whole company is really clearly focused and working towards this list and this phase. Once you're on the cycle, then you have to start thinking about your potential engagement partners. So what I'm showing again here is your value chain in the industry. This is the fiber optics industry, and we're a component supplier. We're actually here in this first column. I've actually positioned ourselves right in the top left-hand corner. And you have to look up at this value chain, and as you look up to this value chain, you see high-speed optics manufacturers, and I've listed some typical companies there. And the high-speed optics manufacturers are actually looking to network equipment manufacturers, and these are even bigger companies. And these network equipment manufacturers are the internet and the communication service providers. And as you can see, there's a whole big sort of cross-section of companies. As a component company, we need to capture the attention of every level of that value chain. And so when an AT&T or a Google or an Amazon decides they want to design their next network, they want to make sure that if they're going to put in an EO polymer, a polymer modulator, they're going to be comfortable. They want to know who we are. So even if we go and sell into either a high-speed optics manufacturer or a network equipment manufacturer, which I've indicated by those two orange arrows, the guys at the far right will want to know what's in their network, and I want to be comfortable what's in their network. And so as a company that's looking up at this value chain as a component company, we need to be aware, and they need to be aware of us and our performance and the impact we will have on their network. So that means that all these folks on this slide need to know what we have in terms of performance, how competitive we are, and how much value we can give to the folks at the right-hand side. One of the other things that comes up when you start interacting with this type of environment are NDAs. And this is another question that's come up by investors over the last year. Non-disclosure agreements. And so very quickly, I'll give you a high-level review. Non-disclosure agreements are designed to keep information between parties private. And in some cases, you're not even allowed to mention you have an NDA in place. There are some companies there that don't even allow you to even acknowledge the existence of this document. But generally speaking, these are used in a number of situations like vendors, suppliers, technical meetings, customer interactions, partner interactions. And what I can say is that we have executed a number of NDAs over the past 12 months. And they're useful tools to engage with customers and vendors, etc. One of the things that is very, very important to us is intellectual property. And this is something that is always on the forefront of the team's mind. And I've got a sort of a complex sort of chart here, but what it boiled down to is that we have a very, very strong IP position. We're leading commercially. We have 45 issued patents, and our patents are from faster devices to low cost, low power, and robust. But you can see last year we acquired Lumera Gig Optics patent portfolio, which was 15 patents. Very, very nice patent portfolio there, very, very broad. We've done some filings. Some folks in the audience probably seen some of our latest patents that have been published. I'll show that on the next slide. We take this very, very seriously. We're in a leading position, and we don't want somebody else to take our technology and abuse it. And so fundamental IP for the whole stack, from materials to process to devices and packaging, is what we're doing. And we're being very, very aggressive about it. And in fact, some of the things folks may have seen, new patent protection. I mean, what does this boil down to? This boils down to freedom of manufacturing. We want to be able to manufacture with freedom, and we don't want to infringe on anybody else. And so what I'm showing here is this was an issued patent, and this was a high-performance next-generation package for EO polymers. The one in the center was a published patent application for an photonics integrated platform, and that's very nice. And the one on the right, I think most people have seen, that's been published about a year ago. That's a direct drive EO optical polymer modulator. And so we're getting some really interesting IP now, not just on the chemistry, but on how the chemistry gets applied into devices and how those devices are packaged, because we want to make sure that we are the leaders there and we're protected. So let's look at our report card over the last 12 months. I think most people probably remember this chart. This is what I put up 12 months ago. Some of the things we're heading towards in terms of our technology platform and some of the operational things. And so the result from the report card is, it's pretty good. We get green ticks pretty much all the way down the list. A couple of yellow ticks there that are still work in progress. One of the really exciting things is this last bullet point here. Last year, we could only test the 50 gigahertz. There was a real problem. What happens if you have a fast modulator, but you can't test it? And our modulators are going faster than the equipment. This has now been upgraded to 110 gigahertz, and it's working. And those on the tour will see the new equipment in the lab. And so we are now positioned not only to design high-speed modulators, but to test and evaluate them. Because if you think about what I just said a few slides ago, folks want to see the data. They don't just want to see measurements up to 50 or 60 gigahertz and the machine stops. They want to see what happens between 60 and 100, what's going on there. We're in a position to do that, and that's great. And so when I look at that slide and I try and took a 20,000-foot view, we've had some great progress over the last 12 months. But I think the real question now is, okay, so if we look back, we've done some great progress. What about the next 12 months? What sort of progress are we going to make over the next 12 months? So I go back to this slide, because this is an important slide. This is a business roadmap slide. And where I've circled here is where we're focusing our attention. You do really well here. The next two blocks are follow pretty easily. Customer qualification, design-in, partnership, ramping, customer acceptance. You've got to make sure you do a really good job here. And this is immediate and in progress. So these are the issues we're dealing with. And as I look through that and I try and summarize that in terms of where are we going in the next 12 months, I've said that a number of times today. We need to have data to show the community. It's being asked for. We're going to provide it. And we're going to provide it in terms of package modulators with very high performance. And we're going to provide it with data on the polymer materials that shows that it's stable and reliable, especially at 85 degrees. And this seems to be the metric most people are comfortable with. Package prototypes for potential partners. We want the feedback. And we'll feed that feedback. And whatever I can feed back to the investor base, I'll feed it back to the investor base. But we need that internally to make sure we have the right performance and the right optimization. A 50 gigabaud as well as 100 gigabaud prototypes. And we want to start looking at the potential partnering for technical evaluation, achieving these specifications as we go through this customer phase. At the bottom is the design-in phase. So we want to be part of that phase and really engaged in that environment. So focusing on partner sampling and technical advancement. Clearly that has to be the next year, providing that data as we go forward. This slide I took from our website, so most people may have seen this slide before, and this just shows, the product family. It shows the 50 gig device used in a number of different applications and a number of different scenarios. And the thing here is you have a 50 gig device and you can use it for 100, 200, 400, or if you want to use PAM4, you can actually double those aggregate data rates up. But the takeaway from this slide is that the 50G markets are just emerging. Our timing is good. Our timing is not bad. We haven't missed the market. We're actually poised really nicely for the market. Another question that comes up is, okay, so you have this facility in Denver, what sort of capacity do you have there? So while I'm not going to go through detailed numbers, when you look at modulators, modulators are chips on a wafer. So each wafer has a number of chips. And we fabricate these wafers in what we call lots. No different than a big semiconductor fab. And each week, lots are run through the line. And we do this every week. And that generates a number of chips per quarter. The chips per quarter is a standard metric industry uses for volume capacity. So what we did was like, well, we have this facility in Denver, and we benchmarked ourselves with a competitive modulator chip suppliers. And we're comparable in terms of number of chips per quarter. So no, I'm not going to give any details about what our capacity is today, but we have a facility and we know what our capacity is, and we've benchmarked it with modulator companies that are manufacturing chips. And it's based on standard toolkits for competitive costs. We don't actually order any special custom equipment in our fab. It's standard equipment. And so we know from a cost standpoint, there's no high costs that are hidden in the fabrication of our modulators. They're standard toolkits. And so we're very, very happy about that. And it's exciting, too. In terms of financial, I think everybody knows that we're listed on the OTC. You know, our market cap, I didn't really check what it is this morning. It runs about 70 million, goes up and down. We did a common stock purchase agreement in January. That the key thing from our standpoint is that gives us about 3 years of runway. So the company is well funded to go through that TRL 4 to 6 to 7 phase of prototyping and piloting. And so we're well funded and we're very, very focused. But one question that came up last year is uplisting, because they're on the OTC, and a lot of folks want to know what about the Nasdaq. So what I'm showing here is this is a table. I'm not sure if you can see that at the back of the room, but that's the Nasdaq listing guide. That's the typical metrics one has to do to look at uplisting to the Nasdaq. Things that will assist that, of course, is revenue, is partners, is customers and products. And yes, we are aware of that, and we're acutely aware of that. But we want to uplist naturally. We want to build shareholder value through high-quality, differentiated, and high-performance EO polymer technology. And this is what we're focusing on right now. And this is where we think is going to be the success in allowing us to uplist. In terms of investor relations, there's just a couple of short slides here. I've tried to summarize the hundreds of questions I receive in about 10. It may not cover all of them, but you know, these are the typical questions we receive, and I'm going to try and answer them as best I can. And there may be some more at the Q&A afterwards. We can address some of the questions. We can't address all of them. So do we have NDAs in place? Yes, we do have NDAs in place. Do we have a business plan? Yes, we have a business plan, and we update that business plan internally all the time. We do it regularly. Are we still doing 50G modulators? Yes, we are. Of course, we're doing 50G modulators. I showed you that slide. And we're trying to push our performance to 100G and get in front of everybody else and maintain that position, both in performance as well as patents and IP and protection. Do the big customers know you? Yes, we had an award recently, and you know, we have a world-class board. We have a world-class technical team. A lot of the big companies are very well aware of who we are and what we're doing. And so the answer is yes to that one. Is the 100G prototype ready yet? It's still under development. And so one of the things that I can convey, when you start going from 50G to 100G, it gets really tricky. It's technically really, really challenging. And so I'm not going to shy away from the fact to say that it is challenging. Not many people have done it. It's very, very difficult to even find test equipment to go up to that speed. And so, yes, it's under development, and we're still working on it. Why is it taking so long? It sort of reminds me of my son. He's like, are we there yet? Are we there yet? We are moving actually very, very quickly. This is an intense, fast development. As I showed from that timeline chart, we've moved incredibly quickly over the last 3 years in terms of not only taking the polymers into an optical modulator device, but actually increase the performance of that device. And that's been really, really exciting. What is our expected revenues? I get this question all the time. We have internal models which are updated as we progress through the customer process cycle. And as we do progress through that customer process cycle, our models will get more and more firmer and we get more and more confident. At this point, we're not ready to give public guidelines on what revenues might be, but certainly internally, that's something that we're watching very, very carefully. Are we running wafer lots in our line? Yes, and regularly. And you'll see the line today of those folks who want to go do the visit. Are you going to outsource manufacturing? It is something we will consider depending on customer feedback. It's something I'm aware of. It's something I've implemented before in previous companies. I'm well aware of the pluses and minuses of outsourced manufacturing. But yes, I'm privy to this issue. If we do it, maybe we can do it here. Maybe we have to go outside. It just depends on what the interest level is and the feedback from the customers. But the bottom line is that the focus of the team is on increasing shareholder value from improving the performance of the polymers. And, the international award, now this is sort of interesting. I mean, I always try and bring something to one of these meetings. So this year I brought the award because last year I think I showed a modulator, but, this is a chunk of glass, right? But what does the chunk of glass really represent? I mean, the glass itself is, Joe was from Corning, it's probably not worth a lot of money, right? But I was surprised when we were nominated. If you look at the other contenders, the other nominees in that category, there's some big players there, right? I mean, you've seen Infinera, Intel, Broadcom. These are not small players. They're not small programs. And so just to be nominated was, wow, this is pretty cool. And then to be told, and I think there was like about 10,000 votes from industry. I mean, that's pretty impressive. That's not just one or two. This is a major international conference. And people, industry experts said, yeah, we really like this. So this is outside review. This is outside validation that folks are beginning to like our EO polymer-based technology. This is a respected work both by a team and as well as the industry. So that's pretty exciting. I was really, really excited to see this. In terms of summary, the slide I showed at the beginning, our polymers, we believe they're unique in they enable the faster, low power, lower cost internet, faster devices, low power, low voltage, low cost, easy fabrication, robust, stable. They're essential components for the fiber communications market. And on the last slide, which is the summary slide, why Lightwave Logic? Why polymers? Well, we have polymers that perform better. It's a world-class design team, a world-class facility. We have a world-class board, and we now have a world-class technology platform that's been voted, a really nice award this year. We've actually persisted with others have abandoned this 20 years ago. So yes, 20 years ago there was a few other companies trying to do this. We've persisted, and we have, in results, robust materials, robust device performance, and a very, very powerful patent portfolio. So we see our polymers solving customer headaches. Our polymers are differentiated, and they bring really good competitive advantage. And we see them as building blocks that can make the internet faster, greener, and denser. And this award by industry experts certainly validates our approach. And so there was one of the lines in the press releases earlier this year, our polymers defy stereotyping. I think they absolutely do, and I'm really excited about it. Thank you. Real quickly, for the folks that are local, there's going to be a bus at the front of the hotel at 12 o'clock noon, and they will shuttle people to the facility. It's 2 or 3 minutes away. It's less than a mile, or maybe it's a mile. Tour will take about 15 minutes. So we're going to tour the facility, so you'll see the chemistry rooms, the clean rooms, high-speed chip device. You'll go into a couple of the labs, and you'll see a demonstration. This year, a little different than last year, we really request no cameras or recording. We're really getting quite sensitive to competitive threats, and so just would like everybody to respect that. And I think it's question time, right, Karen?
Yeah, so if anyone has questions, I'll come over and bring the microphone to you.
Make sure they state their name and all that.
Yeah, okay. All right, so we have a question over here. Yeah, please state your name.
Dick Haskell. I noted in the 10K that you listed licensing as a potential revenue source. Given that a lot of our IP is non-patent protected, how would you envision doing a license agreement and still adequately protecting the IP, notably the trade secret technology?
That's a good question. As we build our patent portfolio, it's becoming very, very strong. I'm pretty sure we're going to get a lot of inquiries on that front, and we'll have to take each inquiry as they come and look at what people are looking to do with our technology. And I mean, we'll have to make sure that if we license an entity, are they going to be our competitors? Are they going to put us out of business? I mean, can we be assured it's the right thing for the shareholders and the company? So we'll have to review each license request as appropriate. But I think you're absolutely right. The way we're positioning ourselves in terms of we're commercially ahead of everybody else. We've got a very strong IP position, and folks that want to get into this game and want to get access to us either have to work with us or try and ask if we can license the technology. I'm not going to go out and license it just because somebody asks. It has to make really good business sense from our standpoint, and that means we're going to have to look at what's being involved. And I can't tell you right now whether we'll go ahead or not, but we'll certainly entertain requests if they come up, and we'll review them. We have to.
Okay, so we have some questions from the online. It looks like you've actually addressed. It looks like you've actually addressed some of these already in your talk. But how long to industry-wide acceptance of Lightwave Logic technology, and what has to be done to get there? And how long to unit production and revenue and cash flow?
So industry-wide acceptance, I think most people in the audience and both online have seen Karen and myself. I mean, we've been fairly public in terms of international conferences, part of the International Photonics Roadmap Committees. And so we've done, I think, a first-class job of putting polymers back on the scene, back on the radar for not only component customers, but all the way up the value chain to the big data center and the cloud service companies. They are aware of us now. They're aware that we're working in polymers. So I think we've done a really good job there at alerting the industry of who we are and what we are doing. And I think it boils down to some of the comments I made in the presentation. We're really in a mode right now where we need to provide a lot more data. It's as simple as that. People are aware of us. And so, yes, we've gone out and we said, yep, Lightwave Logic's got some great results. So we're working in EO polymers. Everybody else is working in semiconductors. And so, yes, people are aware. Now we need to provide the data. And I think that may address that question. And by the way, we're going to continue, too. We're not just going to stop. So we're going to continue with the roadmaps, and we'll continue with the exposure. But as I said earlier, it's always better for somebody like myself to give a presentation with a lot more data. It's just a lot easier. And so, yeah, that has to be a focus.
Yep. We have another question in the room here.
Thank you, Ed Verne. Seems like we've made a lot of progress. Is there any fears of other technologies coming out in the next 5 to 10 years that could potentially either catch up or overtake what we've done in all these years?
I'm always concerned. You always have to be concerned of competition and progress of competition. And so that's one of the reasons why I monitor very closely, and Fred does, as well as Karen and Joe, what's happening in the chemistry world, what's happening in the semiconductor world. I mean, because technologies don't stand still, and you're absolutely right. We've seen some performance increases in indium phosphide. So some research papers show some performance increases. It's not as good as what we see in polymers, but it's not standing still either. We've seen some technology changes in silicon photonics. For example, the standard silicon photonics modulators operate 25, 30 gigahertz. And so there's been a lot of new publications on ring oscillators. And ring oscillators is another form of modulator, requires exceptional temperature stability, and it's pretty tricky. But I haven't seen any performances in any research papers that exceed 40 gigahertz. And so, yes, I'm monitoring it, and we have to monitor it because other technology and competitors never stay still. But the good thing that what we have is that Mother Nature is with us. Mother Nature is with us on the polymers. They are naturally designed to be fast and low power. So our job in the company is just to harness that and just run as fast as we can. Now, I'm not saying that we're going to always beat competition, but knowing where competition is and how fast they are moving gives us a really good feel for our competitive advantage. And so, yeah, indium phosphide is definitely a competitor. It's very small, and it's got popular in the last few years because people have gone to small transceiver boxes. But if you looked at my investor presentation in New York in early April, I mentioned something that is coming up very, very quickly in the technical conferences, and it's called co-packaging. Co-packaging is where you bring the optics right next to the electronic chip, the CMOS chip. And in fact, you put it actually on the chip. So you want to make that interconnect as short as you can so that the interaction between the electronics and the photonics is as close as possible. And if you think about our technology for a second, we've got a spin-on polymer technology which you could spin on ICs and CMOS. So we're ideally positioned to harness the co-packaging trend that's occurring. So yes, I'm watching the competition in terms of the materials and the performance of the devices, but we're also watching how it gets packaged together. And we're actually ideally positioned for this new trend that's just occurring where other technologies are going to suffer. And so, yes, it's not just the materials, it's not just the devices, but you have to look at the packaging too. And you have to look at where all the fronts are and where the technologies are progressing at what rate. And the conclusion is Mother Nature is working with us on a number of different fronts, and that's really, really exciting.
Okay, so another question from online is, please let us know what the new advisors have been doing for Lightwave to help gain acceptance in the marketplace. So, new advisory board we announced 2 or 3 months ago. 3 very, very strong technical people, Andreas, Christoph, and Craig. And the advisors are actually interacting with me mostly. We've had a meeting at OFC. We've had a follow-up meeting at least I had with 2 of them a couple of weeks ago. And we're planning a major advisory meeting probably in the summer. And we're going to integrate the advisors with our technical team. And so they can actually really learn exactly the inner circle of our technology and what we're trying to do, and to bring them into the company as senior technical people. These advisors have had many, many years of commercial technical experience, and so we're actually excited. So we're going to bring them all to Denver, and we're going to do that on a regular basis. So we're very, very excited about that. Yeah.
Hi, Michael. John Murphy. It seems that the lack of enough data is causing some hesitancy with customers and partners in moving faster with Lightwave. Do you see additional costs required to come through with more testing, more documentation, more reporting in order to fulfill that?
No, I think it's just providing the data. I think we have to be honest with each other. Polymers have been around 25 years ago, and a lot of the customers tried them, and then they went with the lithium niobate. And so for whatever reason, and I don't know all the detailed reasons, they want to try them again. They've seen good performance, but they want to be assured that when they put them into their system, there's going to be no problems. And so I think they're just dotting the I's and crossing the T's. I don't think there's any extra cost. It's just us showing them the data. And so we're just going to go into the lab and produce the data. It's as simple as that. Yeah. Part of the data is time. And so if you think about it from a cost standpoint, yes, it's going to take a little bit of time. But I think most people are aware that there's been a negative perception because polymers lost to lithium niobate 20 years ago. But the interesting thing now is that a lot of the customer base want radical innovation, and we have a technology that's providing it. So there's a great, you're providing the innovation, you're providing the performance. Just make me and my boss and my boss's boss happy that when I put it in the system, everything's going to be fine. And if you're a technical person, the bottom line is you just want to see the data. And so I'm a technical person, and if I was in their position, I'd ask the same question. So I don't see it as an impediment. It'll take us a little bit of time, but that's what we're going to focus on. And the other thing that is interesting is that we have the test equipment to support the data where we didn't have that before. And so when you're providing super high-speed devices, if the test equipment only goes up to 50 and your device goes faster, they're saying, well, what happens? This is sort of scary. So now we can provide everything. So it's really exciting.
I'm sorry, could you repeat
I'll
that question?
I'll repeat it. The question was, are there any roadblocks into providing the data, or is it just time? I would say yes, you're absolutely right. There's no major roadblocks that I can see. We've just got to generate the data. And that's something we can do.
Michael, you might want to add that one of the concerns about reliability.
Sorry, can you?
Right. So one of the concerns about polymers has been reliability and long-term stability. So even once we perfect the polymer and the devices, we have to run it over 5,000 hours, which means waiting, better part of a year before you can gather that data. There is nothing you can do about that. And obviously, we're doing multiple projects, trying different things, and you have to take that data. So it just takes time.
Yeah, Siraj is correct. I mean, the normal metrics industry like to see is 2,000 hours and 5,000 hours. So they just want to see the data. I went to a talk 2 weeks ago. It was by Facebook, and they were just showing lifetime data in 2,000 and 5,000 hours of the optical components they'd purchased for their data centers and some of the performance. That's just standard industry practice.
See, so on the line, this is a bit different. Based on all this progress, would a large company be interested, kind of like a biotech company and a pharmaceutical company? But the large company comes in and.
Would a large biotech pharmaceutical company be?
I'm sorry, I didn't paraphrase that well. Would a large company be interested in investing kind of the way a large pharma company would invest in a biotech company?
I don't know the answer to that question. I'm not sure how the pharma industry invests, but I mean, our job is to show technical, first-class technical performance. Large optical network and cloud companies are aware of what we're doing. They want to see the data. Who knows? They'll all have investment arms. They'll all have funding arms. I don't know the answer to that question. What I do know is that we need to focus on what we're doing, and I think these doors will open. And as they open, we'll look at each opportunity.
Any more questions in the room?
I'm sure there'll be others, and I'll pick them offline after I step down. Thank you.
Okay, thank you all.